This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on August 16th, 2018. Our time is 8:08 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. And as we start today's podcast, U.S. dollar strengthening, 96.60. Canadian dollar, 76.09. Gold at 1180.30. Silver 1460. Gold silver ratio is almost at 82. Platinum 783. Palladium 880. WTI 65.15. Brent 70.97. Nat gas 295. Bitcoin 63.50. Canadian Bitcoin 83.15.42. So we saw Bitcoin take a little bit of a correction this week. Dow at 25,457. S&P 28.33. Nasdaq 78.18. TSX 16,148. And as we start today's program, a little bit of different news. Aretha Franklin, the Queen of Soul, has passed away at the age of 76. Aretha Franklin, one of the greatest singers of all time, and may she rest in peace. Now, when it comes to the fires in British Columbia, fires create the smoke that have come into Alberta, and we have been hit very hard with the smoke over the last 2 weeks. On a scale of 10 yesterday in Edmonton, we were at 10. A story on the Drudge Report. California's largest fire ever keeps growing, and unhealthy smoke is blanketing the Pacific Northwest, and we hope that they get the fires under control, not only in California, but in British Columbia, where they declared a provincial state of emergency due to the wildfires. And Harold, your situation in Colorado has improved somewhat, which is good news.
It has, Randy. The fires in and around the area in which I live has subsided and under control. Still getting smoke from California and that, so the air quality has been bad this summer. We're actually heading back to Florida next week, right in the face of hurricane season, which is why we leave there in the first place. The weather is the weather, and you just have to deal with it. This year has been particularly bad with fires in Colorado, California, and in Canada. If you're on the West Coast, you're really getting beaten up this year.
Connect with Harold at rarecoloreddiamonds.com or give him a call at 1-800-432-1022. One of the big stories of the week, and it was actually a carryover from a few weeks, and that was the situation in Turkey. They were having a crisis. The Turkish lira shed more than 40% since January. The stock market had been cut in half, and it was actually in a situation where they were looking at the IMF possibly having to come in and rescue, similar to what they did in Argentina. Now, eventually, the President Erdogan, he was able to speak with the folks in Qatar and get $15 billion invested into his country. So it stabilized things for the short term, but Turkey was in serious trouble. In fact, their annual inflation rate is running at an estimated 101%. Any of these countries, whether it be Venezuela, Turkey, or any of these small countries, could be in that boat at any point in time and can cause problems for the entire world.
You bet they can. And again, you summed it up also with Venezuela, that has 1,000,000% inflation. What's happening in Turkey has happened before. $15 or $20 billion coming into the country will stabilize things for the short term. However, does that really correct the problem? That's the whole thing. If it's only a short-term solution to a longer-term problem, they've got a lot more work to do than just putting a few $1 billion back into the country. The problems are much more severe. It's not affecting the U.S. markets because the Dow is up 300 points this morning. Gold is up 530, but gold has plummeted. Gold has broken through the $1,200 level, actually broke down below the 1180 level, hit a low this morning of 1174.40. So there is minor support in gold in and around the 1150 level. The major support for gold is at 1050. We've discussed that many times. And 1050 because back in 2011, when gold dropped from 1900 all the way down to 1050, so that's now the bottom of the gold market over the near term. There are levels below that around the 850 level that gold could actually reach. That is the longest term support level for gold at around the 850 level, because it's where gold hit back in 1979 and 80, and it's also a very significant price when gold was rallying during that 10-year, 11-year bull market, where gold went from $250 all the way up to $1,900. So at this point here, gold should continue to fall. Now, we could see for a couple days that gold will correct because it dropped so much so quickly, but don't forget, it wasn't that long ago that gold was almost breaking the most important level of 1380 on the upside. It got to 1370, and then all of a sudden the market turned around. The US dollar got stronger, gold got weaker. It went from 1370 to 1170, so we've seen a $200 drop in gold, all because gold couldn't break above the 1380 level and a couple closes above that. On top of that, you've got the US dollar back up to 96 cents. So that's the other scenario. Gold, the dollar have an adverse relationship. When the US dollar is strong, gold is weak, and vice versa. So at this particular point, with a strengthening US dollar and many other economies around the world not doing well, obviously the US dollar is doing strong. Gold market and silver market are actually plummeting. Not only did gold drop to 1174 this morning on the low, but silver, which has been hovering around the $16 to $17 level, is now trading at $14.72. The low today was $14.50, which there is some short-term support at $14.50 in gold. If by chance the gold market was going to actually drop down to the $1,050 level, that could literally bring silver down to around the $12.50 to $13 level. So going to give opportunities to purchase gold and silver at very low prices. We don't need a bull market in gold or in silver in order to own gold and silver. What we want to do is buy it at the best possible price. There are enough problems in the world today, geopolitical, financial, those type of scenarios, that gold and silver will have their day again. The most important thing at this time is to take advantage of the marketplace. And if the market is falling, let the markets run its course, and we will get an opportunity to buy gold and to buy silver at lower levels. Obviously, we have no control over what the markets do. All we can do is report to you what we think is going to happen as a result of the drop or the rise in the market. Gold should rally for a couple days, nothing very strong, but maybe get back up close to around 1200. As long as the US dollar is strong, the gold and silver market are going to fall. Now, we are getting some exaggerated moves today. For example, in platinum. Platinum is up $25 today. It's trading at $7.97, but platinum has been beaten up as much as gold and silver, possibly even more. And palladium is up $45 today, so a huge day in palladium, and is trading back up at almost the $900 level. The oil market is holding in there. The Dow, as I mentioned, is up now 322 points on the day. So as investors in these other countries like Turkey, Venezuela, South America, other European countries, people that still do have money left tend to send their money outside of the country. And because the Dow is doing the best of all investments at this point, a lot of money goes into the Dow. Is that the Dow at 26,000 is a very dangerous market. It has not really corrected itself since the bottom of the market in 2008-9 when it hit 5,500. We've almost seen a 20,000 point move in the Dow without any major correction whatsoever. Now, it's not that it's not infallible, because we've seen the Dow drop many, many times. And back in 2008, it dropped from 14,000 all the way down to 6,500. So don't think it couldn't happen again. With derivatives markets, with the bond markets, with the inflation and other problems with other countries, there are certainly opportunities. And with a president that we have in the United States at this point, anything is possible. There are certain markets at extremely dangerous levels. Just don't go blindly into putting your money into a market because you think it's not going to stop or because it's in the news every day. The general public that normally buys at the wrong time, and in my opinion, buying into a almost a 26,000 point Dow with certain stocks so high is a mistake. You need to wait for a correction in order to buy back into this market. And the stock market is so high and so expensive that most investors can't afford it anyways. To buy Apple or Google or Amazon or any of these companies is out of reach for most investors, just like Bitcoin at $20,000 was out of reach for most investors. Markets will always come back. Just sit there and wait for your opportunity. To buy into a market right now that's at an all-time high, and there's been no correction, and there are severe problems out there that could drop the market substantially, means that you should sit on the sidelines at this point and wait for a better buying opportunity.
Connect with Harold. Learn more about blockchain. Ask about investing in rare colored diamonds, in particular pink diamonds. We'll talk more about that later in the podcast. 1-800-432-1022, the website rarecoloreddiamonds.com. And Harold talking about the stock market. Investors haven't been this bullish on U.S. stocks since January of 2015. Professional investors have the biggest portfolio weighting to U.S. stocks in their portfolio since early 2015, according to the Bank of America Merrill Lynch Fund Manager Survey. The enthusiasm comes despite a number of headwinds that have kept returns in check, and according to Bank of America Merrill Lynch strategists, they say the positioning reflects peak profits, policy, and returns. And people are very bullish, barring a breathtaking plunge. The bull market in U.S. stocks on August 22nd will become the longest in history, and optimistic investors argue it has miles to go before it rests. The bull market has thrived amid a decade of financial and political upheaval thanks to, in part, the all-you-can-eat liquidity feast hosted by the Federal Reserve and other major central banks. Now the Fed has shifted to a tighter monetary policy regime, even as the same risks that have dogged this market over the years, including elevated valuations, persists, prompting some pundits to predict an imminent demise of the bull. But strategists such as John Lynch at LPL Financial argue that the U.S. market still has plenty of upside, and it's interesting to note in our free weekly newsletter, and you can get our newsletter from Harold, 1-800-432-1022, rarecoloreddiamonds.com. We have a chart of the week, and it says here Wall Street's biggest bulls see the S&P 500 rising 12% by the year end. As U.S. equities flirt with fresh all-time highs, the most optimistic strategist on Wall Street is doubling down on his view the S&P will soar 12% in less than 5 months. By the end of the year, the index will reach 3,200 points as the economy and earnings drive the next leg of the bull market, according to Canaccord Genuity LLC's Tony Dwyer. So, Harold, you can see there is a lot of bullishness regarding the stock market, and that is somewhat scary when you see so many people being bullish. And that, in a way, is a warning sign. It's a red flag. Be careful. Don't go crazy in this market, because buying it at the top, as you're saying, is very, very dangerous, and probably a person should be looking to possibly take some profits at this point, go into cash, sit back and just wait to see how things play out, especially with the midterm elections coming up in the United States in November. Will the Republicans keep the House? Will they keep the Senate? We'll find out. How will Donald Trump fare as a result of everything that's coming his way, not only politically in the United States, but geopolitically? In fact, it's interesting to note, Harold, it was 1 year ago today that the NAFTA negotiations began with Canada and Mexico, and Donald Trump continues to hammer away at Canada. He's negotiating with Mexico. Here in Canada, we're wondering, okay, when do we get a shot at this thing? When do we get to negotiate with this guy? He's sort of pushed us out of the way, and he continues to take cheap shots at us. It's an interesting time, and people need to be very cautious. I do agree with you. Caution is probably the most important thing, Harold, right now with all financial markets.
The markets are very difficult to predict at this particular point. There's no major bull market going on except for the stock market. And again, that's not something that I personally would recommend buying into at these levels. In actual fact, it's the opposite. It's you should trail your positions with stop losses in the market, as the professional money managers will do, in order to protect you on the downside. Now, just because you put stop losses in on your position doesn't mean that you're getting out at the price that you put it in. Make certain that if you are going to do that, you understand the ramifications of putting stops in a market. And there's different ways of doing it. For example, there's a market stop. If a stock is trading at $100 and you want to put a stop in at $90, once the stock hits $90, it becomes what is called an open market position. And that means that the next trade is the trade that you're going to get filled at. But in a fast-moving market, that next fill could be at $70 or $60. So you have to know what you're doing in order to put stops in the market and protect positions that you have. If you're in your 60s or 70s, the chances are that once this market corrects, and it corrects substantially, that you will not be able to withstand the drop that it's going to take and the length of time it's going to take for the market to come back up. Example is the drop in 2008-9, when the market dropped from 14,000 to 6,500. 1400, it took years and years and years for the market just to come back to that 14,000 level. If you're younger, your broker's going to say, this is what the market does. It goes up, it goes down, but it always comes back. For us older people, that's not necessarily a good scenario. It could certainly interfere with your retirement type of thing. Be very cautious going into a market like this. Again, we all want to make money, but at this time, you've got to weigh the risk reward and make sure that you can handle the risk. The risk at this level is very, very high.
Stocks could plummet 20 to 30% next year in a big drop, biggest since the financial crisis, according to Ned Davis Research. The bulls may be treading water, according to Ed Clissold of Ned Davis. There's a high probability a record year-end rally will give way to a painful 2019, where you could be looking at the first 20% plus decline in the S&P since the financial crisis, and their worst-case scenario is 30%. He said that our primary list of concerns is on the earnings front, but they said that they really do believe in the short term that they think the stock market could be okay. Their price target is 2,900, about 1.5% from the current levels, but next year in 2019 we could see a 20 to 30% pullback. Now, one of the things that they did in the United States is change the tax code to give more Americans more of their money back. Now, obviously that hopefully stimulates the economy, but by the same token, it also means that they're going into further debt. And the U.S. Feds collected a record amount of individual income taxes through July, and yet they ran a $683.9 billion deficit. And they believe that going forward, they will have deficits over $1 trillion consistently every year. So, Harold, the trade-off is we talked about on a past podcast, and you're right. The hope is that you change the tax code, gives people more money in their pocket. They go out and invest or spend, or corporations will go and give more money to their employees. And yet the problem is, if it doesn't work right, and here they are, they're actually bringing in a record amount of taxes, you're still getting massive amounts of deficits. And deficits at the end of the day, I went on the deficit clock yesterday for the United States, and it's over 21 trillion. And that is a massive amount of money that every person in the United States individually is a part of. When you see the ticker on the debt clock go, those numbers are just spinning by, and it gets higher and higher and higher. And I just really worry about the United States and their debt situation, because if there's a financial crisis, which it will happen again, financial crises happen all the time, usually about every 10 to 15, 20 years. With interest rates the way they are right now and the debt that the United States is in, it's going to be very hard to rescue the economy the way they did with the financial crisis of 2008. It's a completely different scenario because they've added so much debt to their balance sheet. The debt and the deficit is a huge concern in the United States, Harold.
The number is gigantic as interest rates go higher, because we are starting to see signs of inflation. That's why we're seeing a rise in interest rates in Canada and in the United States, is because of inflation. It's not that they want to raise interest rates. The fact is that at zero interest rates, the country grew tremendously because of cheap money. But now that interest rates are going up, makes things much more difficult, and it's going to make it much more expensive to finance that debt. That is one of the major problems. I've also felt that the derivatives market is the market that could really bring down the market in general, because it's so massive and so dangerous and so unregulated. Debt in the trillions of dollars with interest rates going up is a major problem. It is going to eventually raise its ugly head and do some damage. As inflation continues with higher oil prices and food prices and rents and things like that, you're going to see changes to the market. Be very careful about the positions that you're in at this time. Use stop losses or something like that in the market. If you're heavy in the stock market and you're nervous, either sell out and take some money off the table. Make sure you take some of your profits out. You never get hurt by taking a profit. Be cautious of a market that falls, because when it falls, it goes down much faster than it goes up.
In New Zealand, they have banned most foreigners from buying homes as they try to tackle runaway housing prices. The housing market has been open to investors worldwide, but the government on Wednesday passed legislation that allows only New Zealand residents to purchase homes. In recent years, there has been many anecdotal stories of wealthy foreigners from Silicon Valley and beyond buying ranches in picturesque rural areas in New Zealand as a bolt hole or an escape option from a turbulent world. There have also been stories of wealthy Chinese buyers outbidding New Zealanders on suburban homes in the main city of Auckland. 60 Minutes did a piece a few years ago on New Zealand. They went there and they were showcasing how beautiful it is and how a lot of Americans have moved to New Zealand, and it has put pressure on home prices. And it's sort of similar to what happened in Vancouver. You had so many investors and foreigners come in and buy up so much property, it became a situation where the average everyday person who lives in British Columbia, Vancouver, had trouble buying a home, affording a home, or even getting to a point where they could rent a place. It's a phenomenon that is happening all around the world. Home prices are getting to a point where they're so expensive, the average everyday person cannot afford them. Now, is it going to get to the point where what happens is it's passed down from generation to generation and you pay off the mortgage over generations because there's no way you can do it in one lifetime? I know that may sound crazy, but with the prices the way they are in some markets, that may be something that happens in the future where it's a generational thing. People in a family would buy a house and have it for generations and actually be able to pay it off at some point versus paying it off in an individual lifetime. What are your thoughts?
I agree with you in that sense, especially since we have a generation that is not of the workers. New generation are not hard workers. They just don't go out and do it the way us old timers do. I don't have a lot of faith in the fact that this next generation is going to make a ton of money. So to own a home, especially since home prices have increased so substantially and are so expensive, I agree with you 100%. It's more the line that, at this time, 30 to 35% of millennials live with their parents. 40% of millennials get supported by their parents. So how in the world are they ever going to be homeowners? A lot of homes that are owned are for rent. Most people couldn't even afford a home anyways or have the credit rating in order to purchase a home. On top of that, with the mortgage crisis that happened back in 2008, 9, and 10, it's really hurt the market tremendously to where you can't go in and buy a home with no money down anymore. You've got to put up 20 or 30%. $500,000 home, where are these people going to get $100,000, $150,000, $200,000 in order to put up as a deposit? I agree with you in the extent that home sales have to fall over the longer term, and I do believe that parents who do take care of their children will put that home aside for their kids once they don't need it or move out or pass on or whatever. The other thing that's extremely interesting that I didn't know till recently is that in the United States, a friend of mine is selling his business. He's a big-time attorney, and he's selling his business for about $200 million. He decided to move to Puerto Rico. He's going to leave South Florida to live in Puerto Rico in order to save the taxes after he sells his companies. I find that that's also an extremely interesting situation. Somebody would leave their home and move to another place for tax reasons, and that's what's happening at this particular point.
Speak with Harold about blockchain. Learn more about investing in hard assets like rare-colored diamonds. We'll talk about pink diamonds here momentarily from the Argyle line. 1-800-432-1022. The website is rarecoloreddiamonds.com. And before we get to diamonds, pot in Canada is something that is red hot. In fact, Constellation Brands, which for 7 decades has made its money off beer, wine, and whiskey, sees its future in marijuana. In the biggest legal cannabis deal, the New York-based beverage company will spend $3.8 billion to boost its stake in the Canadian grower Canopy Growth Corp, betting legalization, which should happen here in Canada in October, will gain traction around the world and especially in the United States. They believe this is rocket fuel. According to Canopy CEO Bruce Linton, they will now own 38% of Canopy. Constellation Brands include Corona, Ballast Point Beers, and Robert Mondavi Wine, and they had owned 10%. Now they're putting in $3.8 billion to own 38%. And Harold, that's something we're seeing in Canada. There's an incredible interest as we have legalization in October. Obviously, there are some concerns. We won't even get into those right now. You're seeing these companies trying to reposition themselves, primarily alcohol-based companies. I know, I believe it was Molson's. They dipped their toe into this market as well because they want to get a piece of what's happening in the pot market. In fact, there's even talk of having pot-infused alcohol drinks drinks. On the last podcast, we talked about how the future is changing so rapidly, and here we go again. Constellation Brands buying a big piece of cannabis company Canopy in Canada. Really, the future, depending on how the government regulates things, is limitless when it comes to pot. I saw a feature on 60 Minutes when they went to Colorado. There's all these different edibles and so many different ways to consume pot. They really believe it's a way to grow their business, where pretty much they're in a stagnant business, most of these liquor providers, because beer is soft. Some of the hard liquors they're doing fairly well, but it's not a huge growth industry by any means. But they see pot, as it said in the story here, as rocket fuel. And it's going to be something that's a trend throughout the world if more and more companies get involved in legalized marijuana in the different countries around the world that are in that position to do it or have already done it. I would still be very, very cautious, though, as an investor, because a lot of these companies are not making any money. And you need to have a company where it's going to make money, so then at that point, you're going to get your money back, or they're making profits so they can pay you a dividend. So it may sound very exciting right now, but definitely be cautious and really do your homework before you make an investment in the pot area, the marijuana area, because there are landmines there as well, Harold.
Because the fact is that right now there's only a few states within the United States that have legalized marijuana. So you can't travel with it. It's still totally illegal. Can't bank your money because it's all cash and the banks won't deal with it because federally across the country it's not accepted yet. It's still illegal in most of the states. If you get caught with it or travel with it, you're going to get in trouble. Look at the football players, for example, in Denver. Marijuana is legal in Denver, so you should be able to smoke it. However, if the rules of the team and the NFL, which is national all across the country, says that smoking pot is illegal and you're going to get banned for it. So here you've got a situation where it's legal in Denver, but still the league is looking at it as, if you smoke marijuana, we're going to fine you and we're going to suspend you. It's not legal all over the country, and until it is, there's going to be issues. For example, being in business, in the marijuana business, you could make millions of dollars, but where are you going to put the money? That's all cash, and the cash is much more difficult to deal with today than it was back in the day. So there's still issues, and there will be. And the other thing that we talked about on last week's show, how are you going to detect whether a person is driving buzzed as opposed to driving drunk? There's obviously breathalyzer tests. Now, evidently, there is a new apparatus that is coming out in the foreseeable near future that will determine whether or not a driver is driving while buzzed on marijuana, and that is going to be a huge new business. But it's not legal all over the country, and for that reason, it's a difficult business to be in because it's an all-cash business where the banks are not going to accept your money.
There was a survey done here in Canada. They asked people that smoke marijuana, have you smoked marijuana and immediately gone and gotten a car? The vast majority of people said yes. So that is a concern. And of course, if you're living in a communal environment, something along the lines of an apartment complex or a condo, maybe you're a non-smoker, and yet the person next to you is a marijuana smoker and smoking you out, then at that point, there is going to be hell to pay, because these things, I think, will end up going before the courts without a doubt. Connect with Harold about Rare Colored Diamonds. His website is rarecoloreddiamonds.com, 1-800-432-1022. Jewelry is an investment you can wear for 30 years and then sell. What else can you do with that with, according to Chris Delgado, a jewelry expert? Also, Joseph Lipton, CEO of Secured Worldwide, says diamonds are portable, alternative store of savings and wealth that are being increasingly utilized for diversification. And in a new and uncertain world where surprises will continue to catch us off guard, portability should be absolute and be understood as diversification. The ability to easily move savings and wealth is not a feature of precious metals, real estate, or most collectibles, but it is for diamonds. They are arguably the densest and most portable form of savings and wealth in existence. Real estate is fixed, and 1 million worth of gold weighs about 10 kilos, as much as a large car tire, but a handful of collection quality diamonds can be worth millions and fit in your pocket. And that's something that we've talked about, is portable private wealth, real estate in your pocket. It was back in August of 2005. Harold developed rarecoloreddiamonds.com, and the website has been a massive success, in particular with pink diamonds. We brought it to you about a month ago that the Argyle Pink Diamond Tender is hitting the world, and it's going to be in October that the tender wraps up for another year. It will make its way around the world. People get a chance to bid on the different diamonds, and then at that point you'll have the winners contacted. There you go. Another Argyle Pink Diamond Tender is done for the year, but it's one of those things we've mentioned that they may have 2 or 3 more tenders before the mine closes. They believe that by 2020, and according to Rio Tinto in a 2017 annual report, the mine will shut down. So 2020, the mine will shut down. They have maybe 2 or 3 tenders to go, according to the Rio Tinto CEO, Jean-Sébastien Jacques, and he was talking in relation to the 2018 Argyle tender. Harold, this is a market where, as we warn people about certain markets that are out there, financial markets, this is something that people should seriously take a look at based on the fact that 90 to 95% of the world's pink diamonds will be gone, and then at that point it will be a secondary market, and we know this mine is shutting down in approximately 2 years' time. Not many investments can you say that about, where the source is shutting down and at that point there is no more. So this is in our opinion, a very exciting investment people should be taking a look at.
It certainly is, Randy. You know, when you talk about portable wealth, for example, just talk to the people in Turkey, where inflation is now 100%, where their currency is being devalued, where hardships all of a sudden happen that, were unforeseen and you can no longer put food on the table or whatever. If you own diamonds, you could leave that country, you could sell that diamond, and at least you've got money to get back into the game. Now you can feed your family. Now you can get back into business. Now you can do what you need to do. No matter whether you made a huge profit or whether you just freed up cash in order for you to continue to survive, just imagine that the people in Venezuela and other parts of South America, and now Turkey and other parts of Europe, where things are very, very difficult, where in Greece last year or the year before, they couldn't even get money out of their ATM machine. But if you own an asset like a diamond, it could always be cashed in for cash. It always can get you back into the game. But if you don't, then you're at a situation again where you're at the same position as almost everybody else and you have no exit strategy. As far as the Argyle mine goes, that's a phenomenon. There's never been a mine in existence that does what the Argyle mine does. Produces 95% of any diamond, let alone something as important as pink diamonds. We've only got 2 years for the mine to run out. There's not going to be any more pink diamonds, and when they do come onto the market, we believe they will sell for a tremendous return. We're very excited about this. We saw this opportunity about 10 years ago when we first found out about Argyle and that they were closing the mine. The reason they're closing the mine just isn't producing anymore, is that we have an opportunity to invest in an item, a commodity basically, a pink diamond that will be gone forever. I think it's an outstanding investment. They're longer term investments, but now with the mine closing within the next 2 years, we could be in and out of these diamonds within the next 5 or 6 years. You want to give it a few years for the diamonds to run out. You want to make sure that there's nothing available, so when your diamond hits the market, you want it to sell for a high price. Now things are changing. We own 2 auction businesses, and we're very excited about bringing auctions back to diamonds. As Randy has mentioned a couple times during the show, blockchains are the new way to market high-ticket items, and we're very, very excited. We built our own blockchain. Within the very, very near future, we will be putting some of our clients' diamonds up on our blockchain. The thing that I'm excited about, a new way of marketing, is that in the past, if we wanted to sell $1 million diamond, we would put the diamond up on auction, and we would auction that diamond off and find one client around the world that would have $1 million to purchase that particular diamond. But with this new technology of a blockchain, which is basically a ledger, and it's very transparent, what we can now do, put a diamond up for sale, let's say that same $1 million diamond, and instead of trying to find one client that could afford to buy that diamond, we can now do like a group funding, where we would have a contract and say this diamond will sell for $1 million. We could have, instead of one investor or one buyer, we could have 100 investors, 100 people around the world will take a piece of that diamond, realizing that in 4 to 5 years, that diamond will resell for double what they paid for it, and everybody in that contract will double their money. It's much easier to sell to a group of people than it is to sell to one person because of the amount of money that you need to find from that one person. We're extremely excited. We put a lot of money and a lot of time and work into our blockchain, and that should be coming out next month in September. And then anticipate selling some of our clients' diamonds on a new blockchain, and is something that we're really excited and ecstatic about because we're positive that where we invested our money was in the right area, because the future is here today. The future of blockchain is now present. We are going to be selling diamonds and other very high-priced items to groups of investors all over the world because of a group funding that we're doing on another project. We anticipate picking up 20 or 30,000 new clients that will invest in items that we put on our blockchain. This is what we've been doing. We've been realizing that it's been more difficult to get money from just one client as opposed to a group of clients. So stay tuned, because within the next 30 to 60 days, we will be conducting auction on our blockchain, and it's going to be world-renowned. It's going to be something very, very exciting.
Speak with Harold about blockchain, 1-800-432-1022, Pink Diamonds, rarecoloreddiamonds.com, or 1-800-432-1022. As we get to the end of the podcast, it should be noted, and I've mentioned 60 Minutes a few times on the podcast today, but they do great features. And they did a feature a few years ago, about 4 years ago, on the infrastructure of the United States. And I would say it goes for Canada or any other place around the world. And that was one of the things Donald Trump ran on, is actually rebuilding the infrastructure of the United States, which I think is a great idea. In the feature, they said there are many roads, bridges that need to be fixed, repaired, replaced due to their age. And that was one of the things that we saw this week. It was very sad. A bridge on the main highway running down the Italian Mediterranean coast of Genoa collapsed, and the death toll at this point, 35 people. And I saw another story where they were warned 2 years ago that this bridge was a problem. In the 60 Minutes piece, and I believe it was in Pennsylvania, there were a couple of workers in the infrastructure business who stopped to have lunch under an overpass, and they looked up and they noticed, oh, we got a problem here. They reported the problem to the authorities, and that overpass was fixed. But throughout the United States, Canada, all around the world, infrastructure, whether it be roads, bridges, sewers, whatever you want, and I have this on good authority, my uncle's in the infrastructure business, throughout the entire world, we're in a situation where we need to make repairs very, very quickly. A lot of money needs to go into it, and very, very soon. And Harold, what a sad story that they were warned 2 years ago, and this Morandi Bridge ended up collapsing. As a result, 35 people died. In my opinion, obviously, if they were warned needlessly, very, very sad.
Very sad, and it could happen anywhere and will, because these infrastructures are decrepit, they're decaying. And it's only with a situation like which has happened in Italy will it force the powers that be to do something. But in the United States and in Canada, there's no doubt, being, modern countries, it's a problem right now. There's no doubt about it, but it's going to get worse and worse. And where is the money going to come from to correct this infrastructure situation? And I don't know what the answer to that is, because you're talking a mammoth amount of money. You're talking trillions of dollars to fix the highways, the bridges, the underpasses. Concern, and it's a concern that I don't know how in the world they're going to fix it, but there's no money around to do that at this time.
Trillions and trillions of dollars. I remember the current president of the United States, Donald Trump, saying $1 trillion, and it would be that very, very easily. Well, we hear Mr. AJ, grandson of Harold and future PGA superstar, in the background, and Harold was telling me, Harold, you were saying that AJ, he's really getting good at golfing. He's really whacking that ball. I saw a video, and I was very, very impressed. So do you mind being his caddy? Are you okay with that?
I would be 100%. I would live vicariously through my grandson. Now, let's not go crazy. He's only 4 years old, but I got to say that I'm very proud. He's got great hand-eye coordination, taking him out golfing almost every day, and he's doing really well. So I'm going to get him professional lessons when I get back to Florida. The the pro at our club is the top amateur in Florida. He'll be in good hands. And all you can do is give your kids and grandkids opportunity. Give them the opportunity and see what interests them and good at. So far, I'm seeing that he's really good at golf, and that makes me happy because neither of my other sons are into it, and I have to be able to play with my grandson.
That's awesome. Well, remember the name A.J. Siegel, because in about 20 years' time, he's going to be there and he's going to win the Masters and all the big trophies. Sounds good to me. Harold, thank you for your...
That would be great.
That would be
awesome.
That
would be great.
Thank you for your knowledge and another great podcast.
It's my pleasure, Andy. I wish everybody a wonderful weekend and a very profitable day.
And for those in California and the Pacific Northwest, those of us in Canada, British Columbia, Alberta, even into Saskatchewan, survived the fires and the smoke. Here's hoping that this is just a one-off. This is not a regular occurrence every summer, because it would be a terrible, terrible way to live. That's it. Another edition of the World Financial Report podcast. Connect with Harold at 1-800-432-1022. RareColoredDiamonds.com is the website. We will talk to you next week.